Hello everyone and welcome to a new video. And today I'm going to do a video on the financial education series, the technical analysis. Basically, I've covered already a lots of videos on that, the basics, how to use investing.com, the candlestick patterns, lagging indicators, trend lines, etc. So this is the continuation, and I hope to get in more and more videos. So if you have something also which you would like me to probably make a video on, please feel free to ask me in the comment section. Now before I can proceed, I would request you to kindly subscribe to my YouTube channel if you have not done yet, and please do not forget to press the bell icon. Besides that, you're going to find a few links to my social media handles, basically my Telegram, Twitter, WhatsApp. One of the recommended one is the Telegram, which I always tell people to join. Others, you can always join, on the Twitter, and for the WhatsApp, follow me on Twitter and join the WhatsApp too. But the Telegram is the one which I most recommend you all. Next is, and the most important thing is the disclaimer. Please do not take anything which I'm telling as a financial advice. I'm not a financial advisor. Please do your own due diligence, because you alone are responsible for your funds and the risks and profits associated with it. So on this note, let's move ahead and understand today how to draw and how to use moving averages. Now this is a big topic, so I'm going to split it up into three different videos. Otherwise this video would probably become an hour long. So I'm going to split it into the three parts, and today I'm covering the first part, basically how to draw, and then we are going to see in the second video probably the crossover strategies, and the third and very more important or useful setup is a Darrell Guppy moving averages setup. So let's move ahead and start with the moving averages. Now basically, what are moving averages and how do you it helps us over here. So basically, moving averages is nothing but it's like a mathematical average of the highs and lows, and a line is drawn based on that, which helps you in trading. So the most important feature or the benefit of using moving averages, it tells you the trend of the market, whether there is an uptrend. The moment you look at the move, so right now I can see a candlestick pattern over here. A candlestick chart over here. Yes, you can see more or less, there is a, right now you can see there's a sort of a downtrend, but a clear and you can technically correct way of this thing would be via a moving average. So it tells you the mood of the market, the sentiments of the market, whether it's an uptrend, it's a downtrend, or whether it's a sideways market over here. So let us move ahead and see drawing on. So as I told you, this is basically a moving average is basically a lagging indicator. Now what is a lagging indicator? There are two types, basically a lagging and leading indicators. Now I've already covered a video explaining the types of lagging and the leading indicators. You can always check in the playlist section over here what is a lagging indicator. So let's start drawing indicator over here. One thing which I would like to tell you is, you might be probably seeing that some people give the feedback that, probably I'm talking a lot, but it is not about talking a lot. It is about giving you the experience, sharing with you the detailings. You are free to, go and check the video to the point or where you feel, but I'm sure you're going to miss a lot of important thing, like some footnotes or some important tip which I am sharing in between the video. So make sure that you watch the entire video and do not skip any parts of the video, because I have been into active trading for more than a decade now, and I understand these things a lot, having lost some money and invested in various courses and stuff. The choice is yours. Now coming to this drawing, again on investing.com there's a video how to draw and all. If you're a first timer, there is a video. The playlist section would be financial education series, which is both available in English and Hindi Urdu as a common language. Now, to draw a trend line, basically, what you need to do is you need to go into the indicators. The indicators over here. So once you go into the indicators, you would come. There are a lot of indicators over here. Now, right now, we are covering today moving averages. So I'm going to select moving average. So you can see a lot of moving averages over here. So let's select moving average over here, and you can see there is another one called moving average exponential. 1 minute. You see there is a moving average and a moving average exponential. So I am choosing both. Now basically there are two kinds of let's identify it with colors for the time being. I'll go to the format over here, and the first one I'll use a different color. I'm just choosing a random color, nothing over here. Okay, so you can see there are two kinds of let's increase this so we can see out. Okay, basically there are two kinds of moving averages. One is called as the simple moving average, and second one is the exponential moving average. Now you can see there are two lines I have highlighted with the color. The red one is the simple moving average, and the blue one is the exponential moving average. Now, what is the difference between these two basically? So, in case of a simple moving average, now what is basically moving average means there are supposing here, let's say I'm starting from here. There are three candles basically. The high and low is calculated mathematical. Let's say about three candles. It's like a pure mathematical average. The highs and lows is calculated, and you come to a average point over here. And let's say the time frame right now what you've selected is 15 minutes. It can be 1 hour, it can be 1 day. The moving average will automatically populate, so you don't have to do anything manually over here. So this is the moving average for 1 day. If you select 1 hour, it will be for 1 hour. So simple moving average is just a mathematical calculation. Now in case of the exponential moving average, what is done is, besides the moving average calculation, more weightage is given to the recent candles. So just to give an example, now you see there is a downtrend over here, and then there is a sort of a small consolidation. You can see that almost here both the lines are moving at the same, you can say, sort of a wavelength over here, but the red line is here flat, and you can always see a blue line has given way over here. It's moving down, whereas the red line is still flat, and the candles have already moved down, and you can say there's a huge drop in the blue line, whereas the red line is taking its time to drop. What this basically means is that the red line, which is the simple moving average, is slower to react to these candles, whereas the blue line is faster to react to these candles. That's the exponential moving average. The reason being that the exponential moving average gives more weightage to the last few candles. So if supposing the average was calculated from here till here, then you can see the simple moving average is flat. But since the last few candles started dropping, the exponential moving average has factored that, and that is the reason it has changed its course immediately. So many times people ask, which is a better moving average to use, a simple or an exponential? I would personally recommend exponential, and that is what I typically use. Okay, so now that we have understood the difference between simple and the exponential moving averages, let's understand the further details of the same. So let's knock off one of the averages, which is the simple one. I'm knocking off over here. Now you can see there is only one moving average. Now in the starting of the video, I had mentioned to you that you can identify the trend correctly based on the moving averages. Now, how do you do that? So you can see here I have a classical view of that. We have a downtrend, we have a sideways, and we have a uptrend over here. So how to identify it? Basically, this is your moving average line. When the candles start plotting below your moving average, you can see this is your moving average, and the candles are plotting open and close is happening, preferably when the open and close is away from the trend line. So when it is happening below the moving average, it is a downtrend. When the candles are opening and closing above, now you can see over here that even it intersecting is fine over here, you can see, but still the more part of the body is below, and here most of the part of the body is above. So when the candles are plotting above the trend, the moving average, this is a uptrend. And the third thing is the sideways, like here from this period to this period. So this, since this is a 1 day candle, so around 1 2 3 4 5 6 7 8 9 10 15, so around 15 days you can see the market was sort of sideways. It moved up, it moved down, it moved up, it moved down, down, up, down, up, down, and here you can see is a breakout before a final move over here. So this is how a trend line, a moving average can help you to identify the trend. So once you know the trend, accordingly you take your trades, and you must have heard the phrase, and I also follow the same: trend is your friend. So when you're trading, you should always remember that you should always follow the trend. Of course, experienced traders do some counter trading, but it makes sense to follow the trend. So when the candles are plotting above, you're going to take a buy call. When the candles are plotting below, you're going to take a sell call over here. So that's how it helps you to take your trade. Now, these candlesticks, besides providing you, the moving averages, besides providing you trend info, you can also see that it acts as a support and resistance. So let's see over here. Now here is a sort of a minor uptrend. Okay, here is a candle closing down below the moving average, and you can see that this is the sort of support which it was. You can see all this while in the uptrend, this moving average was acting as a support, and once this support has been broken, now this support will act as a resistance. That means the price has fallen down, it will come, it is taking a resistance, and it is moving down, it's trying to come up, it's taking a resistance, it's trying to move down, take a resistance. At some point of time, this resistance will be broken, and it will turn into a support. So you can see over here, here is it trying hard to break the resistance over here. Again there is a fall, again it is trying to, and you can see here there is a clear cut breakout, and now this resistance has turned into support. So it's going to move. You can see now it's plotting above. When it's trying to move down, this is acting as a support. The price is moving on top, it comes down, moves up, comes down, and it is still moving up till a point it again breaks, and then the price is going to move down. You can see right now it's moving ahead. So one thing to note is when the candle is plotting far away from the moving averages, that means that is a strong trend. So in case over here, this was close like up down, but you can see over here that now the candles are starting plotting far away. That means it is a strong uptrend over here. So here you see it's going, and here there was trying to break out, but it is support. So trend has weakened, or it is a consolidation over here. There you see, I had mentioned the trend had weakened over here. There is a clear cut breakout, and there it goes. Now this will act as a resistance. So this is how your moving average would be acting as your support and resistance too. Okay, Now again, you can let's take some example how you can put your TP and SL, that's your take profit and SL over here. Now let's say we are over here right now, we don't have a clear cut this thing movement over here. So you see over here there is a kind of a doji formation, a hammer. So I'm expecting it to go out. It's cutting the moving average. So let's say I'm trying to take a trade over here. I'm just taking anything random over here. I have not tested it. So let's say if I had to buy over here, okay, you can say it's moved down. So probably here, so it's sideways over here. So here there is a bullish harami. I think this is this pattern I have already covered over here. So once you take a call over here of buy, your stop loss would be at the previous candle's low, that is over here, because here you can see there is a clear uptrend over here. So uptrend over here. So TP, as you know, there are various ways you can take it based on percentage. You can take it based on the time frame, and probably your risk taking capacity over here. So you could take anywhere over here. The price was here 1680. This is gold chart. So it's moved on top and it is still moving, and here you can see. Now as I had mentioned to you, once there is a breakout, that is the time to exit for sure. When you can see a major breakout, it's still high. Dojis is something which you need to be aware of, especially when it is happening at the top of the trend. So here there is a clear big bearish engulfing. So for me, this would be a red signal. I would try and move out from here, book my profits. Probably the market might go up, but there is a very, very strong chance, giving the kind of candle formation, that we are seeing a downtrend from here, or at least a correction. So it has moved on top. It's gone sideways. Here you see, this was a clear cut indicator that it had crossed the moving averages. There was a bullish a bearish engulfing right at the top, and you can see there's a huge drop. So even if you have mentioned your stop loss over here, still you'd been profit even if you are exiting over here. But if you combine moving averages with candlestick patterns, like as I had mentioned over here, there is a pair over here, bullish harami and a bearish engulfing at the top. So patterns happening, right the bottom of the trend or the top of the trend give you very, very good signals. So this is how you can use the moving averages in conjunction with in other indicators or the candlestick patterns in itself. So we've understood how to identify the downtrend, how to identify uptrend, sideways markets, how to use the moving averages for your support and resistance, how to use moving averages to take an entry and to exit. Now further, there are some popular moving averages which are very, very popular. So let's try and plot them. So now here I have not shown you regarding the settings over here. So when you come over here, the settings, in the inputs, now this is the period. Now this, supposing you are selecting here, for example, 5, and your time frame is 5, that means the candles what it is selecting is 5 hour this thing for 5 candles, moving average of 5 candles. Supposing you are selecting day over here, this should be calculating a moving average for 5 days. And by default the source is closed, that means when the candle has closed. Offset, leave it as it is. Styling. Now one thing which I highly recommend in styling is the color. Typically, you identify when you're using especially a crossover strategy over here. So now I think the video has been already 15-20 minutes long. So I'm going to cover in a separate video the crossover strategies, how you can trade on crossover strategies or moving averages, like the death crossover or the golden crossover and Daryl Guppy setup. So make sure that you follow the next subsequent videos also, because I'm going to show you now. Right now it's shown you on a single moving average, but I'm going to show you a crossover of moving averages. Now I'll explain to you what that crossover is. So right now, say my first moving average is 5. So this would be the faster. The smaller the number, the faster it's going to react to the market. So let's say 5. Style I'm going to leave as it is default. Let's leave, make it black. Okay, here you can make it darker, thicker. So let's leave it default, unless you're highlighting some major one. You can have your price line showing over here, but too many lines. Okay, so I'm leaving it out. I say okay. I'm going to go again into the indicators. Now, as I told you, we will be using only moving average exponential. So settings again from 5, the next one, I'm just plotting here the popular candles over here, 21, and the style. Here, this is one of my favorite moving averages, 21. That is especially when you're day trading. So my favorite over here is the 21 day moving averages. So I'm just going to make it more prominent. I'll make it little darker because I want to highlight it. Okay, so this is 21 days. Then you can have I'm talking about days, but if you're choosing like hours, it will be on 20 like here hours, 21 hours. It will be, this will be like 5 hours. So that's how it works basically. Then the next moving average, let's say moving average exponential. So 1, 2, 3, 4. Okay, so there you go. So next I'm going to plot 50. Let's keep it default color over here, black. I'm going to keep, so 50. Then 100 and 200. This is also a very, very important yardstick, 200 moving average, which is there, which is also a very, very important moving average. I'm going to make it red, highlight it, make it thick. Not that the other moving averages aren't, but this is, so you can see I can hide. For example, I don't want to see the moving averages. I can just go and hide, 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 hide. If you don't want the other one, so I'm going to unhide it now. Unhide, 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 and unhide. Now this was an extra. I'm going to knock this off over here. So if you see this, you can see that there is, all these candles have been plotting typically above this moving averages. So this is a clear cut uptrend. Now below that, you can see here this was a downtrend. You can see the lines are plotting below. Now, as I told you, my favorite, the one which reacts according to the popularly used one, is the 21 day moving average, which is the blue line. So anything plotting below the blue line, for me it's a sell. And when it is plotting above, now this, you can see a small false breakout, but for smaller time frames, you can see you can buy over here, you can sell over here, you can buy over here, you can sell over here. So when you're working on smaller time frames, a 21 EMA is very quick. So like can buy, sell, or if you are selling over here, since the closing is down, you can buy over here. Again, when it drops, it's uptrend now. So you can see there's uptrend, there's a huge closing over here. So here is what, when it's closed down, you're going to sell. You see it drops up to here, and when it is closed up, it's an uptrend, you can sell over here. So this is how quickly your 21 day EMA will do. Now you can see I've also highlighted the 200 EMA. 200 EMA is also very, very strong, this thing. So supposing you have plotted this, anything happening like below the 200 EMA is a clear cut signal and a very strong signal to sell. You should be taking sell. This is a downtrend over here. You can see there is a clear cut gap between the moving average over here and the candles. So until and unless there is candles plotting above, now you can see there's an uptrend over here. Here, there you go. So again, if you see right now in 1 hour time frame, it is almost closing. You can see there was a huge gap, okay, and it is closing over here. But this could probably, if this candle was down and if it goes further down the 200 EMA, that was a clear cut signal for selling. But you can see a green candle has popped in over here. The market is closed right now. So probably, even if it leaves over here, the fact that it is at the 200 EMA level, this right now as it is, the candle is not completed, as it is a bullish harami pattern, plus it is having a strong support, like at 200 it's taking a support. So there is a good chance that there's going to be a bounce again. Just you can see over here, there was a fall and a bounce. It's come and taken support exactly at 200 EMA over here. So I'm expecting that if this candle turns, if the next candle turns green, you can expect it to go up. And if there is a red over here, you can expect that the trend has changed and that now the market would be going in the downtrend. So this is how you can work with the trend lines and the moving averages. Now the crossover, what I was talking about and which I will be covering in the separate video, like over here you can see the red and blue crossing each other, and the blue and the red crossing over here, and again the red and the blue about to cross over here. So you can also trade on the crossovers of the moving averages. So how to go about it, how to trade on crossovers is something which I'm going to be covering in the next video, because I'm sure by now we have already covered 20 to 25 minutes. And what I would tell you is immediately after you've watched this video, do make some own notes of yours and do some back testing. Back testing is nothing but like you go back and try to predict over here. Back testing, like if I'm telling you, let's say over here, now I can see that the market is going up, up, up. So you can see it is closing below, still it's near the support. So I'm going to wait for a clear cut signal. Now here there's a good chance that there's a price is dropping over here. It's still around the support level, but here it has moved on top, and here it was just taking support and the support has been broken. So you already had a signal over here. So this is how your back testing you can do on already plotted charts. So I hope that you like this particular video about the moving averages. I'm sure it's going to help you a lot in your trading, and do let me know your feedback in the comment section. There is something which you could not understand. There is something which probably you want me to highlight more in the subsequent videos of the moving averages. And if you like this video, please do share it across, because I can find a few likes. It doesn't cost you anything. Your likes, your shares is what keeps me motivated. So please do shower the video with a lot of likes, share it across so more and more people can gain this knowledge, because I'm sharing this this knowledge for free. I've put in various hours into trading myself. I'd invested in courses to learn that, and I'm sharing all that for free. So for that, I humbly request you to do give a lot of likes. And before I wind up with the video, a final request: if you have not yet subscribed to my YouTube channel, kindly do so now. So until the next video, take care and be safe.